Morning, I'm Steve O'Hare from Signal Centre. This is Talking Bull. Welcome to our show on the 3rd of May. Going to run through it. Joe's not with us today, but I'm going to run through the news headlines, dive into the technicals, have a little bit of fun with a gun to head, and let's see what we can give you today in terms of content. So, US very much a focus today with the Fed expecting to hike rates later, but we've also got headline Eurozone CPI inflation rate edged higher to 7% from 6.9% previously. Core rate edged lower to 5.6 from 5.7, and this was in line with expectations. US JOLTS data recorded a decline in job openings to 9.59 million at the end of March from a revised 9.97 previously, and below consensus forecast of 9.75. The weaker than expected data for a second successive month triggered fresh fears over the economic outlook. US JOLTS data helped trigger a fresh slide in risk appetite as markets fretted over recession risks. Equities posted sharp losses, with fresh losses in the banking sector, and treasuries posted strong gains. Markets also fretted over the US debt ceiling issue. Yen regained ground or regained some ground as risk appetite deteriorated and US yields moved lower. The dollar overall was mixed with some recovery against European and commodity currencies, but retreated from intraday highs. We'll take a look at that from a technical perspective soon. Federal Reserve will announce later its interest rate decision. Consensus forecasts are for a further 25 basis point hike to 5.25%. Markets are pricing in just over an 85% chance of this. The policy statement and forward guidance from Chair Powell will be crucial for all asset classes. And the ADP jobs report with ISM services sector data will also be important for confidence in the US outlook, especially if there are releases, if the releases are a long way from expectations. Market expectations are for an increase in US private payrolls of 150,000 and an ISM services reading of 51.8. So that's the news so far. Let's dive into the technicals and take a look. Share my screen with you now. We're going to start off with Bitcoin. So daily chart. Let me get rid of this Elliott wave. So looking at a chart formation at the moment from a daily perspective with a potential head and shoulders. Now, this is one of my favorite formations, and it's playing out rather nicely after seeing price action over the last week move higher towards this 30,000 level, and we've rejected it so far. The neckline for this head and shoulders chart formation is around about 27,150. So what we need to do is see a move and a close below there on a daily basis. Weekly basis would be better. But if we'd managed to clear 26,500 on the downside, I'll be even more convinced by this formation. Now, when I drew this, I didn't really see what the Elliott wave was saying. This is an automated tool we can use, and it's telling us that we are in an ABC correction, which shows that potentially we have further downside. The 161.8 would be a level to target if we do manage to get a full correction, and the measured move target for the actual head and shoulders formation is not far away from that 161.8, which comes in at 23,430, and it's about 23,000 for that measured move. So a couple of things to look at on the Bitcoin for a potential downside move. Obviously, we've got to clear, if we're looking to go higher, we've got to clear above this resistance zone, which we can show you on the weekly chart. Goes back a long way. This resistance zone between 28,600 and 32,500. So that's the resistance we're struggling to clear at the moment. Taking a look at Ethereum on a daily basis, and again, we seem to be in a fifth wave impulsive, final and fifth wave impulsive move higher, and we're breaking down. Again, we can see that signs of a head and shoulders top. Just draw it in there for you, something like this. Again, well, this is a bit of a sloping down neckline, so it shows it's a slightly weaker one, and potential for measured move target on here down to around about where support was last time, around about the 1433 level. Again, on the upside, we've got resistance from 1960 all the way up to 2150 on Ethereum. And XRP, Ripple, has sort of stalled at that 55 to 58 cent level and retested the 54.60, broke back down. We've been down to 43.34, major support coming in at 35.5, and really would expect to, again, it looks like a little bit of a topping formation, although the momentum to the downside has slowed a little bit. So that's covering off the indices, the cryptos. Let's take a look at commodities. Gold had a decent rally yesterday. We can see it's broken out of the triangle formation, which I had drawn on the 4-hour chart. Now, I'd be a little bit careful still. Potentially what you get in triangle formations is a false break initially. So is this signifying that we have potential for the downside? Wouldn't argue against gold. Obviously, that's quite a safe haven asset. So when we are seeing interest rate rises going on, this is typically a asset that benefits from that. We've broken up, got up to 2020. Our most recent high is 2050, all-time highs 2075. So levels to watch there. Potentially really look for, on a short-term basis, I'd look for a bit of a pullback, maybe to this top of the triangle. Now we'd call it a reverse trend line, and looking for buying dips around that 205 level, which was a previous swing high. So a little bit of support in there after clearing above that 208 to 2012 resistance area. So looking pretty positive on gold, and I definitely wouldn't stand in front of it. It is one of my really fancied assets. Also, we can see if we look at the more recent, the daily price action, we can see there's a nice upward trending support coming in, with support now around about the 1978, 1980 level. So they're levels to watch. And you can see momentum turning over to the upside. So bearish momentum has stalled, and we're looking for a move higher. So gold looking positive. I can't say the same about crude oil. Now, WTI crude oil broke down again yesterday. It looked like we were getting a bit of a recovery towards the end of last week. Friday's price action reversed, formed this morning doji star type formation. But Monday's price action was slightly negative inside Harami, but looks a little bit like a hanging man. And we broke down yesterday, broke through the support at $74 and extended lower all the way down to 71.30. Looks like it can continue lower as well. I wouldn't stand in the way of this. And Brent crude oil, similar sort of price action and similar sort of break lower. So let's clean this chart up. Really looking at next real support down at $70 on the Brent. Brent trading at a premium of about $3, $3.70, and yeah, looking pretty negative at the moment. All inventories will be out later also, I think. I'll check that when we go to, let's take a quick look. All inventories. Yes, all inventories out today. So let's move on now to what we normally do, or what Joe normally does, is the the FX. Really taking a look at the dollar index now. Crucial day for the dollar, with the Fed potentially raising rates later. That's the expectation. We had a bit of a rally yesterday, got up to 102.40 on dollar index before reversing quite sharply. We'll take a look at how that's impacted on the euro dollar and cable and everything shortly. But yeah, quite a significant high, broke above the real resistance at 102.25, continued higher, but really failed. So have we posted a bit of a shooting star rejection candle there? Doesn't look very clever at the moment. So potential for further downside in the dollar. Euro dollar has had, you know, on the basis of that, obviously euro dollar has benefited. We can see bit of a bullish hammer coming in here and the extension higher this morning. Taking a look at the 4-hour chart, we're breaking above the Ichimoku cloud resistance. That's coming in around about these levels, 110.35. So quite a positive week really since last Tuesday. We've had price action moving nicely higher here and above resistance now on a short-term basis. Support, we expect the cloud to provide a bit of support all the way down to maybe 110 and looking to target this swing high that we saw on the 26th of April for the upside. Again, with that, there's another high, 110.73. So that would be the point at which we'd expect to see price action kicking in on the resistance side. So in a bit of a channel, sideways channel for Eurodollar really. Cable, taking a look at this, again, we bounced off the 4-hour Ichimoku cloud, nice little rally over the last couple of days, and challenging resistance now at 125.12. Above that, we've got 125.85 to target. Anything, if we manage to break back down below the most recent low, we could look at a move down below 124.35 to extend lower. Again, we've got quite a nice sort of trending, upward trending support. That's should do a bit of a job for us at those levels. That's coming in today around about that 4-hour Ichimoku cloud. A number of contact points on this upward trending support line. So looks quite supported at the moment. What else do we want to look at? There's no real requests on the stream at the moment. If you have some markets that you'd want me to take a look at, I'm happy to look at those. Let's take a look at a nice reversal yesterday. We saw sterling yen break up quite aggressively on Friday. However, we've seen a really nice bearish outside candle posted after we hit a high of 172.33 and rejected lower. Now we've off to a little bit of a negative start this morning as well. So are we seeing price action topping out at previous resistance levels? We can see here that we back in October we got up to that high again. Looks like it's rejecting from there, so wouldn't be surprised to see sterling yen on the back foot this morning. I think CAD yen was one mentioned yesterday. You can see that that reversal in the yen pairs has really sort of like shows that yen strength is in and around the markets, and a nice bearish outside candle shows signs of topping. That's after breaking through those resistance levels at 101.20. Managed to get up to 101.80, but reversed sharply lower, below 100 now, 99.76 trading. So another good one to look at really. Other yen pairs, Euro yen, bearish outside candle. Aussie yen, shooting star candle, again at quite significant resistance levels. So that yen strength feeding through the markets. Definitely one to watch today. Maybe a good potential for the gun to head. Now, let's take a look at that. Oh no, let's dive into a couple of indices. Just something that reminded me really of what myself and Joe were looking at yesterday on the gun to head trade idea. We looked at two. We looked at the EU 50. We saw potential for a stall in the rally and the market breaking below support levels, and really sort of captured some nice reward on that. We saw the again, we see the EU 50 on the short-term chart breaking below the 4-hour Ichimoku cloud and the hourly Ichimoku cloud, and on the daily chart posting a hanging man candle on the weekly and the daily. So that was significant. And Joe obviously looking at the CAC, Courant, the FR40 EUR, and saw nice hanging man candle in there and a reversal forming, which played out rather nicely into our gun to head trade idea. This is a part of the show where normally the both of us, me and Joe, take a trade, pick a trade, have a stop and target. The risk reward ratio has to be at least 2 to 1. Trades are closed at 9 p.m. so we don't have any overnight risk unless we hit the stop or the target, and we risk 1% of our capital. So let's just take a look at, we've opened an account to start the year with Oanda. Here it is here, and you can see we started with £2,000 and we're at 2034. So we're in the black or above the watermark from when we started. So quite pleased with that indeed. I'm again looking at the I think there's a risk obviously on the indices side of things. Might want to take advantage though of the yen strength for me, along with maybe that dollar weakness that we're seeing, and potential for a bit more to the downside. Looking at the most significant one for me is probably that rejection on the Aussie yen, and breaking down below the hourly Ichimoku cloud obviously is significant for a short-term trade idea. Just desperately looking through, and Canadian dollar yen looks to me that's been quite significant. So let's go with a Canadian dollar yen. I'm looking to get short of this short position and looking to target a move down towards support. I'm going to bring my stop in. Really could do with the stop being around about the 100 level. Giving it a lot of room to the downside, really. So a good 4-to-1 risk reward gives us a little bit of room to the upside on the stop. And yeah, looking to set this up. We're going to sell. We're going to sell at market. We're going to have a stop loss. We're going to risk 1%. Our stop is looking to be 117.80, and we're targeting a move to 98.1780. Looking for that's close to a 4-to-1 risk reward. Getting that on now. That looks pretty nice to me, and we are short of Canadian dollar yen. I'm sure we'll have some Canadian movement later with the oil inventories as well. So that's the gun to head trade idea for me today. Let's take a look at what we expect later in the markets. We've got US ADP jobs report, as we said at the top of the show. Expected that later, with the ISM index coming out at 3 o'clock. That's at 1:15, the ADP. US oil inventories, that's at 3:30, and the Federal Reserve policy decision with the Fed Chair Powell, press conference after that, 7 o'clock and 7:30. Events for the rest of the week, it says next week, but it's the rest of this week. ECB policy decision and the US unemployment, the US employment report and Canadian employment report, both on Friday. So plenty of price action to see this week, plenty of volatility, plenty to think about. So looking forward to that, and looking to see if we can capitalize on that. So thanks for joining me today. Joel, you're out tomorrow, and we'll see you then. Happy trading.